In this video, we're going to walk through the proration of over or under applied manufacturing overhead, modified problems 729 and 730. We're told that Southern Rim Parts estimates its manufacturing overhead for the year to be $90,000 and its direct labor cost to be $200,000. The first three jobs that Southern Rim worked on had actual direct labor costs of $50,000 for job 301, $75,000 for job 302, and $100,000 for job 303. For the year, our actual manufacturing overhead was $97,000, and we're told that we apply overhead to jobs on the basis of direct labor cost using a predetermined overhead rate. And we're going to prorate our underapplied overhead to jobs based on actual direct labor cost. Let's begin by calculating our predetermined overhead rate and picking up our given information. We were told manufacturing overhead was $97,000. Again, that was our actual manufacturing overhead. Our estimated cost for the period was going to be $90,000 in manufacturing overhead and $200,000 in direct labor dollars. So our predetermined overhead rate is 45 cents per direct labor dollar, which means every time we assign $1 of labor cost to a job, we'll assign that job 45 cents in manufacturing overhead. We're given our information for direct labor cost, $50,000, $75,000, and $100,000 for jobs 301, 2, and 3, respectively. So our applied manufacturing overhead for job 301 will be the 45 cents per direct labor dollar times $50,000, or $22,500. For job 302, we'll assign $33,750 in overhead. That's the $75,000 in labor cost times 0.45. And finally, job 303 will assign $45,000 in direct in manufacturing overhead. So our total applied manufacturing overhead will be the $22,000 plus the $33 plus the $45 for a total of $101,250, which means we had over applied manufacturing overhead of $4,250. We were told that Southern prorates manufacturing overhead on the basis of direct labor cost assigned to jobs. So let's go ahead and calculate that proration if we're using direct labor cost as the basis for assigning cost to jobs. We need to calculate the percentage of total direct labor cost that each one of these jobs represents. We had $225,000 in total direct labor cost, and $50,000 went to job 301, which represents 22% of the total cost. Job 302 represents 33% of the total cost. And finally, job 303, the $100,000 divided by 225 represents 44%. Let's add up our percentages to make sure we calculate them correctly, and we've got 100%. So the overhead that we're going to prorate to job 301 will be the 22% multiplied by the $4,250 in over-applied manufacturing overhead. So we'll have a proration of 944. For job 302, we'll take the 33% and multiply it by the 4250, and we get 1,417. And finally, for job 403, we'll take the 43% and multiply it by the 4250 to get 1,889. Adding it up to make sure that we have indeed allocated all of the over-applied manufacturing overhead. So our journal entry at the end of the period would need to be a debit to manufacturing overhead because we need to reduce this. So we're going to have a 4250 debit to manufacturing overhead, and we will have a credit to work in process job 301 for 944, a credit to work in process job 302 for 1,147, and of course a credit to job 303 for the 1,889. Of course, these could have been to work in process job 301 if that's where it was, or it might have been finished goods job 301, or it could have been cost of goods sold 301. We'll make those entries directly to the subsidiary ledgers for job 301, 2, and 3. Let's consider another method or way of prorating or allocating our over-applied manufacturing overhead. What if instead we're told that Southern Rim prorates under or over applied manufacturing overhead on the basis of the ending balances in work in process, finished goods, and cost of goods sold. In other words, it doesn't really bother tracing these costs directly to the jobs. Well, we're also told then that work in process had a balance of 10,125, finished goods has an ending balance of 30,375, and cost of goods sold of 60,750, for a total of 101,250. We need to calculate the percentages for each one of these. Work in process accounts for 10% of our total cost. That's the 10,125 divided by the 101,250. The 30,375 divided by the 101,250 is 30%. And finally, the 60,000 divided by the 101 is 60%. We total those up for 100,000, and then we simply take our allocation percentages and multiply it by the amount of over-applied manufacturing overhead. So 10% of the 4,250 is 425, 30% of the 4,250 is 1,275, and 60% is 2,550, and we total that up to make sure that we've accounted for the entire 42,250 in over-applied manufacturing overhead. Let's consider one other way of allocating this overhead. What if Southern Rim somewhat arbitrarily prorates under or over-applied manufacturing overhead equally to work in process, finished goods, and cost of goods sold? That means a third to each of the accounts. Well, we would charge work in process for 1,417, finished goods 1,417, and cost of goods sold 1,417 as well. Again, making sure that we have completely allocated that over-applied manufacturing overhead.